President Trump says that the U.S. is in a, quote, very strong position with China, but it appears Wall Street disagrees. U.S. stocks suffered their worst losses of the year Monday as trade tensions escalated.
All three major U.S. stock indices lost close to 3% or more yesterday. Here's a look at what the Dow is doing right now. It's up about 200 points. We'll continue to see how the market plays out. There are certainly economists who are worried that the actions by the Federal Reserve and coupled with the actions of the president, including tariffs and escalating this trade war with China, is having this negative impact. Right. So we'll see how it plays out today.
So Yahoo Finance reporter Scott Gamm is joining us now to talk a little bit about this. Where do we expect the markets to go today after yesterday's losses? It certainly seemed like it was going to take a downtick because I think the Asian markets were starting to slip, but things are recovering a little bit.
Well, that's right. We are seeing U.S. markets recover slightly amid the stabilization of the yuan, and that was the big worry yesterday that contributed to that nearly 800-point drop in the Dow yesterday. But remember, just because we're up right now this morning doesn't necessarily mean we'll be up at the close, because for investors who remain really worried about this market, you could start to see investors sell into strength. So we want to make sure that this rally holds, and obviously we have many more hours left in the trading session. But I think investors for right now are comforted by the fact that the yuan has stabilized, and that was a message to the market that China still has control over its currency, and that message was a little bit sort of bifurcated yesterday.
So, Scott, long term, I mean, I think that, yes, we've seen some gyrations over the course of the last couple of days, but there are some economists who are very pointedly worried about what the future holds for the markets, given these tensions with China and other actions, including the Fed last week. What are your estimations showing?
Well, when it comes to market pullbacks, they are common. You know, we get one or two of them every year. And even the one we just had over the past couple of trading sessions, we are still above the low of the most recent market correction, which was back on June 3rd. So that kind of puts it into context that the markets are still kind of moving higher, and they're still up double digits so far in 2019. Now, you are starting to see some top Wall Street firms come out and kind of temper their forecasts for a trade deal between the U.S. and China. Just today, Goldman Sachs came out and said that they don't expect a trade deal between the U.S. and China before the 2020 presidential election. So that gives you an idea of just how long this sort of tension can drag out.
So yesterday, Treasury Secretary Steven Mnuchin formally labeled China a currency manipulator. But what does that designation actually mean for the two countries?
Well, it's a great question. I'm not sure what it means beyond just the headline, beyond the press release. I think this was sort of a knee-jerk reaction just to kind of get back at what China did, and certainly China's response was welcomed by the market because they stabilized the yuan, and that's why you're seeing a little bit of a recovery in the market today. But certainly you could argue that tensions have been rising between the two sides, and I think all market participants are watching the president's Twitter feed just to see what he says next. I mean, he has been quite vocal over the past couple of trading sessions, not just about China tariffs, but also about the Federal Reserve. And he's really been linking the two together over the past week or so, perhaps trying to get the Fed to cut interest rates even more. Now, when you look at what the market is expecting from the Federal Reserve, the market is pricing in a 100% chance of a rate cut at their next meeting in September. Now, whether the Fed will oblige obviously remains to be seen. But remember, as we talked about the other day, you know, lower interest rates tend to make stocks more attractive. So even though the markets have been volatile lately, if we do get more rate cuts, at least from traders I've been talking to, that could bode well for markets in the coming months.
All right, Scott Gamm, thank you very much, Scott, as always. We appreciate it.
Thank you.